This is the briefing for Friday, October 14th. Well, yesterday's trading was certainly something to behold. After releasing the CPI numbers, which came in hotter than expected, the market appeared to want to sell off. We opened with a gap down, as you can see right here. This is the spiders and this is the Qs. And then it was very interesting, and I discussed this in last night's briefing also. Typically, when I'm trading, and I was short, and I was short, a pretty good short, coming into yesterday's trading. But normally, when you have a move like we saw yesterday at the open, when you have bad economic news that can have an impact on the valuation of traders and investors, you want to see a gap. You want to see immediate follow through. Now, I trade on a 15-minute chart. I just don't get the wild swings on a 5-minute chart, and 1 minute is just way too short for me. But I trade and manage my trades on a 15-minute chart. I look at and plan my strategy on an hourly chart and a daily chart. But when I saw what happened yesterday, and we had the gap, and then you can see this first 15 minutes, this first 15-minute candle, that was the first indication that potentially something wasn't right, because in that first 15 minutes, we had a buying tail where buyers came in, drove it up, and we had a selling tail where sellers came back in and drove it up. So this was a 15-minute time frame that neither buyers nor sellers could gain control of the market. But then in the next 15 minutes, you can see we took out that first 15-minute candle. That was another indication that something wasn't quite right, and potentially we were going to see some type of rotation up. Little did I suspect that we were going to close the gap. I never thought the gap would get closed. I thought we might close part of it, and it appeared that we were going to close about half of it right through here where we got this pause. That didn't occur either. The real crux of the matter, though, was, and I think I showed this in last night's briefing as well, I trade the VIXY, which is an ETN based on the VIX. And in fact, I was long the VIX coming into yesterday's trading. And another thing that tipped me off that something wasn't right with that gap was, one, it didn't gap and go. It didn't run. In fact, it started to retrace. And two, this was the open yesterday on the VIX or VIXY, and you can see it didn't even take out this candle here based on where we were and based on that bad economic news. And then it immediately started to sell off. So that was two pretty clear indications that something else was afoot, and that I potentially wanted to start to take off my short positions, which I did. And fortunately, I was able to get out of my short positions right in this area, right through here. Now, one of the other things that occurred was that breadth was fairly strong, but it wasn't that strong, and that really led me to believe another instance that potentially we were going to see some type of reversal, but that's not what happened. Price development was strong yesterday. Volume ticked up yesterday, which supported the move. I was very surprised we didn't see breadth stronger. It was only about 1,500 shares in the NYSE and about 1,500 in the NASDAQ as well. So that didn't give this the appearance of a very strong rally in terms of the internals. It was a very strong rally in terms of price development. And then, of course, we came into today's trading, and another little surprising event. Normally, I'll look immediately for divergences, and we did. You can see we opened with a higher high. But breadth was not diverging, and you can see that right there. Breadth was not diverging, neither in the NYSE or the NASDAQ. But then, of course, we got this beginning of a sell-off, and as this candle started to trade and traded through this low here, it was a clear signal that potentially we were going to see at least some type of short-term move to the downside. And what I haven't done a calculation or a Fibonacci retracement on this, but it looks like today we retraced about 50% of this move from yesterday, and maybe a little bit more than 50% in the Qs. So it's going to be interesting to see what happens on Monday. Now, I had to admit in yesterday's briefing that this caught me and I think a lot of other people by surprise. And there's a lot of people out there that are speculating on what caused that move. And I think probably the best speculation was the fact that it was short covering. And if it truly was short covering, I certainly contributed to that move, covering my shorts. Now, once again, as the move started today, I started adding my shorts back in again, not all at one time, and I have probably about half the positions on I had when we opened up down here in yesterday's trading. Now, I guess a couple things here. One is that we're back at a very important key reference area, and that's extremely important. Even though we took that out in yesterday's trading, we had a false breakout and then a move back to the upside. But this area right through here gives us an area of good trade location for Monday's trading. Basically the same thing in the Qs. You can see that area of rotation, a little bit of a downward bias right through here. But if we trade below that, the low of today, then that's going to suggest potentially that we're going to break through that important support level and test the low of yesterday. If we trade above it, then potentially what we're looking at is a three-step counter trend rotation, where this is the first leg, this is the second leg, and the third leg could potentially be just as long as this leg. So that's unforeseen, at least for right now, as to which of those strategies will develop on Monday, but we have to just see what happens at the open on Monday and whether we break through this low in the Qs and in the spiders. Now, looking at the longer term charts, you can see that this is the area right through here that is a very important key reference area. This goes all the way back to the June 17th lows. This is the September 30 lows. And then, of course, we took those out. We rotated just below it for 2 days of this week. And then yesterday we took it out and then traded right back above it. And then today we are right back at it once again. So this is an intermediate term key reference area, support area in multiple time frames. And this is a battle that is going on between buyers and sellers. And I said in previous briefing that if this level is broken, we're likely to see an acceleration to the downside. We didn't see that. What we got was a rotation back up again. So somebody, or short covering, whatever you want to attribute it to, stepped in and certainly stopped this from accelerating to the downside. Had pretty good volume in the spiders yesterday. And then, of course, we had a higher high today. And then on a daily chart, we do have a huge divergence in breadth. On a 15-minute chart, that divergence really isn't there. But so on the longer term perspective, there's a huge divergence in breadth. Volume was slightly lower than yesterday. And in the NASDAQ, we have basically the same thing. This area right through here is a really important area, right around 270. We tested that today and then backed off from it. So it's going to be very important, very interesting to see what happens in Monday's trading. Divergence, once again, at the open today in NASDAQ breadth as well. The Russell, looking at where it is right at important support. Going up 165 up to about 166 right at the close today. Now, I should point out also the indices closed at the lows today, and that suggests that if the market had not closed, that we would have seen a continuation of lower prices. So that suggests the higher probability of potentially of lower prices on Monday's trading, at least in Monday morning. But that's yet to be seen. In terms of overbought and oversold, we are slightly oversold. This still absolutely gives the market an opportunity to continue selling off on Monday. But we need to pay attention to this. Now, you can see here, this was an extreme oversold condition. I think this was an extreme that I have not seen this indicator go to this extreme like that with all three time frames that are on the chart. So it's going to be important to see what happens on Monday, and that's going to give us potentially the longer term, or I should say probably intermediate term outlook for the indices, whether we're going to see a continuation of lower prices or whether we are just stuck in some type of a rotational pattern and we're going back up to test potentially this 430 area in the spiders. I think that's a lower probability right now, but what happens right here, 355 in the spiders, or today's low in the spiders, and then the low from yesterday, taking that out would be a significant event, which would then allow for the acceleration away from this 360 area, which is the important support level for the spiders. Going back to the Qs, the same situation here, 270. We need to accelerate away from that. It had an opportunity to do that yesterday. It didn't happen, but it looks like potentially Monday we could see that. Now, I would just use a lot of caution at the open on Monday. And especially if today's high is taken out, then that suggests to me that we are in the middle or at the beginning of a three-step counter trend rotation, 1, 2, and 3 yet to come. So 2 strategies for Monday that I'm going to be looking at. First one is potentially this is a three-step counter trend rotation. I have to be aware that we might see another leg to the upside, and that would correct part of this move to the downside. Now, keep also in mind, this is a series of lower lows and lower highs, and you can see those lower highs have not been broken. It would be extremely important in the spiders for 380 to hold on any additional move back to the upside, because that would break this downtrend and suggest the potential for some type of greater degree time and price rotation, potentially going back up to test the 394, 395 area. So second strategy is that we're going to accelerate to the downside. We're going to take out today's low and potentially take out the low from yesterday. And if that occurs, it's going to be really important to watch what's happening internally. Want to see volume continuing to build, and you want to see breadth at an extreme negative, at lower than it was in today's trading. And potentially we need to move away from this 360 area and definitely take out yesterday's low. So if you really are looking at this in one way or the other, sometimes the market gives us enough information that we can come up with a really good strategy for the coming days or weeks. And other times it doesn't give us enough information, then we need to just be patient and stand aside and wait for the market to give us a little bit more information before we know exactly what the next greater degree time frame move is going to be, because it potentially is going to be a good one. Have a great weekend, and I'll pick this back up on Monday.